the difference between income, expenditure and receipts and payments account. Income and expenditure account deals with incomes and expenses. Incomes and expenses, but receipts and payments deals with cash inflows and outflows. They may be income or expense, or they may be capital in nature. When we talk of incomes and expenses, we are talking of revenue items. But here we talk of cash flows, cash inflows and cash outflows. So only cash flows come here, whereas here whether the cash or whether non-cash, any expense, like for example depreciation is a non-cash expense, will find its place in the income expenditure account as an expense, but not in the receipts and payments account. Similarly, any income, if it is earned, even if not received, will be there in the income and expenditure account. But if it is not received, it does not find its place in the receipts and payments account because it considers only cash flows. Since receipts and payments considers only cash, it deals with cash. It is basically a summary cash book. Therefore, receipts and payments account is a real account. But what does the income and expenditure deal with? It deals with incomes and expenses. It deals with incomes and gains. It deals with expenses and losses, and therefore this is a nominal account. Income and expenditure is in the nature of a nominal account. Receipts and payments is in the nature of a real account. In income and expenditure, only revenue items are considered, but of course in the receipts and payments account, capital as well as revenue items are considered. Purchase of furniture, purchase of investment, sale of any asset, etc., etc. Everything, anything which involves a cash flow, whether capital or revenue, finds its place in the receipts and payments account. But income expenditure, only revenue items. Income expenditure, we consider only current period expense, current period income, irrespective of the cash flow. Whether we receive, we don't receive, whether we pay, we don't pay. Whatever expense or income relates to the current year, current period, will find its place in the income and expenditure account. But in receipts and payments, whatever is the cash flow, it will be cash flows whether relating to the current period, previous period or future periods. If money has been received, it will come. If money has been paid, it will come in the receipts and payments account, irrespective of the period to which it pertains. The closing balance in the income and expenditure is either surplus, excess of income over expenditure, or it is deficit, excess of expenditure over income. But the closing balance in the receipts and payments account is nothing but the closing balance of cash and bank. Cash in hand, cash at bank. The closing balance, surplus or deficit, is added or deducted to and from the general fund. That is how the surplus is treated. But in case of receipts and payments, you get the closing balance of cash in hand, you get the closing balance of cash at bank. They are assets and shown on the assets side of the balance sheet. Income and expenditure does not have any opening balance to start with, but cash book, or the receipts and payments, is a cash book. It starts with the opening balance of cash, records all inflows, records all outflows of cash, and ends with the closing balance of cash. This in brief would be a comparison between income and expenditure account and the receipts and payments account. Income and expenditure is similar to the profit and loss account of the final accounts of a trading or profit organization, whereas receipts and payments account is like a cash book.